Hi, good evening. This is Business Plus. I'm Kartik, Malhotra, and let's dive in straight into an action-packed next 45 minutes. And to begin with, what else bigger today than, of course, in addition to the stock market crash of over 1%, Asian Paints Q2 results. Suyash Maheshwari joining me in the studio.
Hi, Kartik.
Take me through the numbers, Suyash. Hi, nice to have you back with us.
Thank you.
How are we doing on numbers? Below expectations?
Yes, the numbers are actually below expectation on all fronts as far as revenue is concerned, profitability is concerned, margin is concerned. Now, profit for the quarter gone by stood at around 1232 crore versus 803 crore in the previous quarter. Now, as per our expectation, profit was expected to rise to about 1287 crore. So, a 4% miss on the profitability front. Revenue for the quarter stood at around 8,479 crore, a 0.3% rise on a year-on-year basis. But from our expectations, it was down about 6%. We had expected revenue to come in just above the 9,000 crore mark. EBITDA, which is the operating profit, was also below our expectations. We were expecting EBITDA to come in at around 1800 crore, but for the quarter it came in at 1717 crore, which on a year-on-year basis is a jump of about 41%, but it's about 4.6% lower than what we had estimated. Margins also came in lower. On a year-on-year basis, they were up about 580 basis points, but about 68 basis points lower than what we were expecting. We had pegged margins to grow at about 630 basis points or so. Now, the company said that the revenue miss could have been because of the impact of the monsoon. They said that the buying that they see during the Diwali season could have been pushed from September
Because of
to
the
October.
delayed Diwali
Yes,
itself.
also Diwali is coming in, I think, about 2 weeks later
That's
than
right.
the previous year. So that's why we are seeing a very small 0.3% rise on a year-on-year basis as far as revenue is concerned.
Okay.
The company also talked about constrained profitability as far as its international businesses are concerned. So domestic business is hurt by the sentiment. International business profitability is not coming through for the company.
All right.
So all in all, numbers are not looking good for the company, but the guidance, the company has come out, we'll obviously hear more from them during the earnings con call, which is scheduled at 5 p.m. this evening. But the management, after the initial print, has said that they are optimistic about the demand, given that, festive season and the wedding season is about to kick in. So Q3 will be good, will be better than Q2. And and the overall buoyant economic growth conditions. So as far as Q3 and Q4 are concerned, they are expected to be better than Q2.
All right, let's hope Q3, Q4 numbers come out better, but let's also go across right to Avinash Gorakshakar, who joins us. Avinash Gorakshakar, Director Research, Profitmart Securities, joining us live. Hi Avinash, good to have you back with us. Good evening.
Yeah, good evening.
So how are you reading the Asian Paints numbers this afternoon, Avinash?
I think broadly, numbers have been in line, but I think the market was expecting a stronger growth in the volume growth for the decorative segment. And as far as margins are concerned, I think the markets would be looking at the outlook on margins very closely once the con call gets, finished. Largely because, competitive intensity in the paint market has increased quite significantly. We got new players like JSW, Grasim who have entered the market. So I think despite a festive kind of period, which is well known, for the third
Yeah.
quarter of this financial year, margins are going to be very important. So I think, I would say that the numbers are in line, but I think for a better understanding and more conviction, I think the management commentary and the outlook which would be shared by them would be very important.
Absolutely, and that is expected in a few minutes from now. But let's stay on these numbers, Avinash, and I want to understand from you a revenue rise of just 0.3% versus a net profit rise of 53% upwards. How do you explain this sort of imbalance between rise in revenue and supernormal rise in profits, and yet you're saying it's below expectations?
See, normally, when you look at the financial performance of any company, I think you've got to correlate it with both the top line growth and the profitability growth. Uh, so in this scenario, revenue has not even grown by 1%, but the profitability has jumped by almost 53%. So, which clearly means that there has been some abnormal, kind of rise in other income, or typically, maybe some certain costs have been eliminated in this quarter. But if you look at a normal quarter, what the market would have expected is a strong value and volume growth in top line, and a reasonably steady growth in the profitability. See, this kind of profitability, honestly, whether the company can sustain it quarter on quarter for the next 2 to 3 quarters
Yeah.
is something which is quite questionable. So I think qualitatively one needs to look into the numbers rather than just looking at the bottom line number.
Absolutely. And I think Diwali around the corner, another, 20 days or so from now. So Q3 numbers should give some sort of, Diwali should give some sort of a fillip to Q3 numbers in your opinion?
Yeah, definitely. See, Q3 has traditionally been a very strong quarter for all the paint companies, and I think obviously rural demand, urban demand picks up quite well during this period. So I think you're going to see a lot of activity, a lot of paint consumption in this period. I think the key crucial factor would be what is the outlook on raw material prices, especially crude oil prices, which has now reached almost $90 a barrel.
Right.
For Asian paints, crude oil price is a very important variable. So I think point number one is what is the price trajectory expected there, and secondly, in terms of the competitive intensity, see we all know that JSW and Grasim have entered the market with
Exactly.
extremely cost competitive kind of prices. So I think we will obviously get to hear all that from the management, but I think this apart, the third quarter should be better than the second quarter.
Right. So while we await, I think management commentary coming in maybe in a couple of minutes from now, it seems that Q3 could see the revenue really bolstering up, but margins being under pressure. But Suyash, how's the stock taking the results that have been announced today?
I mean, before I get to the stock, I think one of the reasons why we are seeing this sort of a beat in profitability is because crude prices softened from a year ago period.
Right.
I think, we were just coming out of the Ukraine war. The crude prices pretty much throughout Q2 of last year were, trading between the range of $95 to about $110.
Right.
And as we know, crude prices are a big part of, raw materials for paint companies.
Pure
about
input cost.
30% or 35% of the entire input cost. So that's why I think we are seeing about a 50% rise in profitability. I mean, I don't know how much of that also comes from the operational efficiencies that the company has, created over the year.
Right.
As
Let's
far
talk
as
about the stock. How's the stock being
as
hit?
far as the stock is concerned, the Asian Paints stock was down about 2.5% before the results.
Okay.
We saw about 1% decline after the results came out. So in the end, the stock ended at 3.59% lower for the day at 29 and 51. And I'm also looking at the stock compared to other paint manufacturers as well. I think Asian Paints has been a clear underperformer in the last few months or so. I mean, if you look at the 1 month return, Asian Paints is down about 10% so far. Berger Paints, on the other hand, is down about 6%. Nerolac is down about 3% or so. If you look at the 6 months return, Asian Paints has given returns of about 2%. Berger is up 11%.
Okay.
Nerolac is up 26%. So Asian Paints has clearly been an underperformer in the last few months or so. And as Avinash was also saying, Grasim is about to enter the market.
Absolutely. One more big elephant walking into that
And it's
beautifully
aiming for
painted house or yet to be painted house.
And it's aiming for the second spot. So it's definitely going to eat away from some of the market share from Asian Paints because it's at the end of the day the largest player.
Absolutely. So who takes the biggest beating, Avinash? Where are the shots really going to be felt the hardest? Would it be Asian Paints? Would it be Nerolac? Would it be the entire painting block? Or where do you really see the bloodbath really coming in with this new added competition from Grasim?
No, I think my guess is, earlier, there were expectations that Asian Paints would also cut prices, but I think looking at its market leadership, possibly the smaller players like Berger or ICI, these are the typical companies where possibly initially the effect of market competition could come in. And thereafter, as volumes increase for Grasim and JSW, I think you could obviously see that, market share erosion happening for Asian Paints also, because ultimately it's a commodity product. And frankly, looking at the pricing strategy of both JSW and Grasim, we believe that pricing is going to be a very key element in volume expansion for these new two players.
All right. And tomorrow is another big day when it comes to numbers coming out. We've got Maruti Suzuki and
Reliance
we've got
Industries.
Reliance Industries. Avinash, what are your expectations from Maruti and Reliance?
See, Maruti, I think, should show a decent set of numbers because volume growth has been quite impressive. And most importantly, margin pressure is likely to be a little softer considering the softer trend in commodity prices. Our sense is that Maruti should show a decent growth in top line as well as EBITDA, in terms of margins. And I think obviously with a very large order book with them, specifically for very popular models, I would not be surprised that the markets would obviously look at the kind of growth trajectory the company comments for the second half. Usually, the second half for Maruti is considered to be much more robust because, as you mentioned earlier, and also like paints, car markets also get a strong kind of momentum in the third quarter, which is a festival quarter.
Right. And what about Reliance Industries?
Yeah, I think Reliance Industries, the bigger issue is what is the outlook on the telecom and the retail business, because these are two growth engines which are growing very fast. As far as the oil and gas business is concerned, the rise in crude prices do not have an immediate impact because most of these costs, the crude prices are passed through for Reliance. But I think in terms of the oil and gas business, market should obviously look at any kind of new trigger in terms of expansion or in terms of some strategic tie-ups which the company had mentioned earlier. But I think the telecom business and the retail business would be key data points to share. And of course, the recently announced geo financial numbers which have come in have also given a lot of confidence that Reliance will definitely also boost from a host of its other subsidiaries in the business. So I think net numbers should be in line. No major kind of fireworks, but yes, the market should be looking at some sort of commentary, specifically for the retail as well as for the telecom business.
Slightly out of question, out of syllabus question for you, Suyash. We are living in this era of demergers. We've seen the ITC story play out. We are seeing the Vedanta story playing out. About time that even Reliance was now heading towards some sort of a demerger to really maximize shareholder value. You've got Jio, you've got Reliance Retail, you've got the oil and gas business, you've got JFS, financial services. Isn't it about time that some sort of a demerger initiation begins at Reliance?
I mean,
and let's not talk about entertainment just yet.
I mean, we were expecting that from, the AGM this time around, because that's what the management said. They'll give us some guidance as to what the demerger timelines is going to be. I think that has been a major drag on the stock also. If you see at the stock, if we are removing that the impact of JFS, which was carved out, it has pretty much been range bound. It has been trading in a range of about 23 to 2800 levels for the longest of times. I think nearly 25, 26 months or so. In fact, even now, from what I can see, Reliance Industries is in that range pretty much. Lower band of that range, given that the market has seen a bit of a correction, but Reliance has not really, picked up from those 2800, 2700 at the higher end levels. And I think that will be, one of the boosters for the stock going forward, that demerger activity, that unlocking of value that investors are, really hoping for to happen in the next quarter or so, over the next few quarters.
And since you're talking about market correction, I think it's definitely a good day or a bad day, as you want to see it, to talk about the bloodbath that is continuing pretty much unabated in not just Indian markets, but markets the world over. What's happening? What dragged the markets down today?
I mean, before I get to what dragged the markets, let's also just give us a quick roundup of what happened. I mean, if you look at the markets, it's just another day, another sell-off. That's how the market has been of late. Nifty also, after it opened at around 19,000 levels or so. But right after it broke that level, there was a steep decline, and the decline we saw throughout the session. Now, Nifty made an intraday low of around 18,837, which was incidentally just about 13 points lower than, our support, what we were expecting would be a support for this session of about 18,850 levels. Sensex, on the other hand, dropped by about 900 points and closed below the 63,200 levels. I mean, the story really is in the broader markets, Kartik. If you see broader, I mean, Nifty mid-cap, it's pretty much, falling in line with the headliners, so nothing interesting there. But the small caps have been resilient in the last two sessions, even
comparatively.
Yesterday.
I mean, small cap is also down. It's not that, it's bucked the trend.
But
it is continuing to be down, not as down as the rest of the markets.
Yeah, but the market is correcting by 1 to 1.2%, whereas small cap, the broader markets are expected to take the bigger hit, because at the end of the day, that's where the, the investors have made the real money in the last few months. So they are sitting on those profits. Also, I mean, when like at a time of volatility, generally investors prefer to move towards blue chips rather than, so they book their profits from the broader markets. But we are seeing, even today small caps was down about 0.3%, whereas Nifty 50 fell about 1.4%. Yesterday small cap was down about 0.2%. Nifty corrected by, about 0.83% or so.
Okay, let's get an Avinash here. Avinash, you'd come on our show and you had made this correction prediction, if I may, that Nifty will actually find its real correct value at about 18,500 or so. Would you stick by those estimates in the next couple of trading sessions, or are you looking at even further lowering of the Nifty on the charts?
No, I think clearly, we could see a little bit of correction on the Nifty even from the current levels, maybe another 150 to 200 odd points. Most importantly, as Suyash mentioned, the small cap and the mid cap space is something which has seen a lot of action from ultra HNI investors, PMS investors, and that is why, despite being a very volatile space, investors have come in, made a lot of money here, and that's why we have seen the damage to be relatively low in this category. But yes, in the large cap category, I would believe that valuations are not cheap. I think there also, if you look at companies like Asian Paints,
Yeah.
for that reason, Mart, I think valuations are expensive, and I think you need to now look at sectors and companies very cautiously, because going forward, returns are going to be very selective, and only in those companies where the earnings growth trajectory is good, where the outlook is better, the management commentary is strong. Only there, I think one could see a decent upside, and there would be no easy money now going forward in the markets.
Okay, Suyash, you want to talk about the factors which are driving markets? What are we picking
Yes,
up?
I mean, from what I understand, most of the factors are global. Let's talk about four factors that have been ailing the markets, in the past 6 sessions or so. Now, there's a fresh spike in the US 10-year Treasury yields.
Absolutely,
You know,
5% plus.
5% we saw on Monday, but then we saw a 20 basis point decline
Okay.
on Tuesday and Wednesday.
Okay.
They have retraced that 5% level, and I think it's just below that 5% mark at around 4.95%
Right.
or so. So that's adding to the pain. Another fact is that US dollar index, which had slipped below that 106 sort of levels,
Back well above
it's
100.
back above the 106 mark,
Yeah.
and it's actually inching towards that 107, 107 sort of levels, which will be a pain point for India and other markets as well. Then there is obviously the Israel-Hamas conflict. Netanyahu recently said that Israel is perhaps gonna do foot invasion of Gaza. I mean, if they indeed put foot to the ground, the situation will only escalate from here on, and it will spread to other regions of the Middle East, which, as we know, is the oil producing belt for
Absolutely.
the
So
country.
oil will continue to be under pressure.
And talking about oil, we have seen a bit of a correction over the last couple of days. Brent has slipped from that $90, $92 barrel mark. It's currently hovering around $88, $89, but still uncomfortable zone for a market like us, which is a net importer.
Right. So Avinash, more pull out from Indian markets at an institutional level and perhaps some inflow at a retail level, because retail investors sitting in India are definitely not looking at US Treasury bonds to invest in. So are we going to see more outflow of FPIs, FIIs, and we might see some retail participation, which could overall continue to drag the market?
Yeah, I think, see, as far as the FII flows are concerned, my sense is that as long as the dollar continues to remain strong and the rupee continues to remain weak, fresh dollar inflows are not going to come in, because obviously looking at the currency factor, FIIs are very apprehensive now. And with bond yields at almost 4.95 to 5%, there is no major incentive for them to come and invest in India. So that's the reason you're seeing a very major outflows. In fact, yesterday we saw 4,000 crores of sell-off on the cash market side
Yeah.
by the FIs. As far as the retail money is concerned, the SIP basket is growing. We have a monthly inflow of around 16,000 odd crores. So I think that is going to give a little reasonable amount of support to the Indian equity, especially the broader market, where you'll see continuously, money being deployed in the Indian equity market despite these kind of panic sell-offs. So I think to that extent, yes, retail money is going to be a very big kind of a supporter. But near term, I think, as long as the FIs continue to sell, the sentiment is going to be quite drowsy and quite negative. So we'll have to wait and watch when the market bottoms out. At least for the near term, it looks as if volatility will continue.
So more pressure on the rupee. Do you foresee RBI engaging in more selling of forex? Is that likely to continue as a trend? I mean, we have comfortable reserves, not 600 billion worth, a little lower than that, but we are in a comfortable zone when it comes to forex. Will you see the RBI undertaking more selling of US dollars?
So I think, see, we'll have to wait and watch, but clearly, I think on the export side, India has underperformed, and with US and Europe, being major US export markets for us, if our exports don't pick up, obviously the rupee is going to be weak as we get lesser dollars inflow in the country. And to that extent, I think you could expect some action from RBI, but definitely, I think, at least this weak trend in the rupee will continue for some more time.
Okay.
Avinash, talking about FIIs, I was just looking at one of the graphics our producers was playing. Interesting thing playing out there. In the last quarter, it seems FIIs have raised stake in several of the IT companies. As you can see on your screen, it has raised stake in Infosys by about 16 basis point, in TCS by about 1 basis point, Tech Mahindra by about 53 basis points, and in Wipro about 15 basis points. Now, IT sector has been one of the worst performers, at least as far as FY24 goes in the first 2 quarters of FY24. Why are they buying IT stocks at this point in time?
No,
And
I think
IT
my
seems to be
guess
the
is,
most at
I
risk
think
with recession impending,
Exactly.
or dollar index
I
rising.
mean,
You're
that's what the
seeing
expectation is. FY24 is pretty much
washout for
expected to be
IT.
washout.
Avinash.
I think Suyash, this is interesting data points which you shared, but I think my guess is that at least for the next 2 quarters, IT sector is going to be under significant pressure. Like yesterday, Tech Mahindra reported results, very disastrous numbers, 60% fall in profit, and I think the outlook was also quite cloudy. So I think my sense is that Indian IT companies are going to take a reasonably long time to get back into action, and I think at least FY24 is ruled out, as you rightly said. Maybe we could look at FY25 with a little positivity. Hopefully, the US and the European markets pick up. But definitely, I think in terms of the order book inflow, the execution kind of lineup is going to be extremely crucial. This was very clear from the cutback in guidance by Infosys. Despite having a large order book, the guidance has been cut down, and even TCS management has clearly hinted that, in fact, despite having a large TCP, the execution is now going to be very crucial. So I think I'll prefer to wait and watch. But I said FIs are definitely looking at extremely attractive valuations. These are all asset-light businesses with a lot of cash on the books. So the moment some tailwind comes into the market, especially for the IT sector, the bounce back could be equally stronger. So I think that could be possibly one of the reasons. Very attractive valuations, and I think near-term downside is already factored into the prices.
Now, Avinash, we were just talking about the factors that are weighing on the markets. I mean, it's the bond yields, it's the crude price, it's the dollar index. All of them seems to be imported concerns. So, should we now be more concerned about what the US Fed has to say than the RBI?
Yeah, I think my guess is as a strategy, we believe that the domestic facing sectors should do extremely well. I think as far as any company which is into the export market, specifically overseas markets like US and Europe, I think those are the companies which are going to be hit the worst. So I think clearly, what the US market does, what are the bond yields, typically what is the scenario on the Israel war. These are global factors which are going to weigh down in the very near term. But domestically, we are doing pretty well. GST collections are up. Typically, even IIP numbers are decent. My sense is that, on the ground, corporate capex is also picking up quite well. Credit growth is also close to double digits. So I think domestic related sectors and domestic related themes are going to play out much better. And I think that would be a very good defensive strategy in this kind of market to protect capital and to expect a reasonable risk reward in the very near term.
So perhaps, I mean, given that India's situation remains relatively intact, would you recommend like buying into the market at current levels, given that we have seen 1,000 point or so correction in the last 6-7 sessions?
Yeah, I think selectively we continue to advise our investors that sectors like automobile, capital goods, real estate, cement, these are sectors where we believe there's a lot of growth opportunity yet on the ground. In fact, most of the real estate companies which have come out with numbers for Q2 have sounded very positive. Secondly, in terms of the private sector and the public sector banks, if you see most of the private sector banks like ICICI Bank, Axis Bank, or typically even a PSU bank like today Canara Bank reported numbers, very strong numbers. So I think mostly I would believe that these are the sector choices which we feel whenever you get a decent decline, one should definitely look at buying more and accumulating when the chips are down. But yes, I think you need to give a slightly more longer time horizon here, because now the risk reward will take a long time to actually pay off.
So, Avinash, I understand, your sort of concern about maybe being a little underweight right now on export-facing sectors and being perhaps overweight, if not absolutely neutral, on domestic factors. But that's from a stock perspective. From a larger economic perspective, IT is too big to ignore in the India growth story. So, if we are indeed looking at a washout here, it is bound to create some pressure on the macros of the country as well. Wouldn't that also eventually weigh in on the markets?
So it will definitely, it will weigh down on the markets, because the services sector is very important. If the IT sector underperforms, it's going to create, as I said, a little bit of pressure on the rupee. And I think it's definitely not good in the longer term because, as Suyash mentioned, that we still are a net crude importer. So it's going to impact our trade deficit number. And to that extent, macro numbers could definitely be impacted. So I think, obviously we need to understand that how long this underperformance will continue. At least in IT, the companies are sitting on decent order books. And our hope is that at least FY24, if not going to be a very strong year, at least even if they can maintain last year's performance, that would be a good sign.
Now, Avinash, also want to get your view on the banking pack. The numbers so far seem good. We have seen a good bit of a jump in profitability. Loan growth has been great. I mean, in the case of Axis Bank, best in 7 years. The banking index, however, on the other hand, is facing the heat. It's down about, 6-7% or so in the last 10 days. What's the story there? Why are we seeing this correction in the Nifty banking pack?
Yeah, I think I've been talking to a lot of people, and Suyash, I think one indicator which I've got to know is that credit costs are going to go up the roof.
Sorry, lost you there, Avinash. Could you repeat that?
I was saying, I was talking to a few people. They were saying that the credit costs, for most of the banks are going to increase quite significantly. And that
Okay.
is going to put pressure on the net interest margin. So that is one factor which is now resulting in some sort of sell-off in the banks. But I think, if credit growth remains to be in double digits, then I think you could possibly see these banks consolidating. I think beyond a particular level, I think as the economy grows, as GDP grows, I think you're going to see a lot of appetite from the banks. Banks are finally going to fund all that growth. So I would not be surprised if you look at numbers from NBFC players like Bajaj Finance, Poonawalla Finance, very very robust numbers, and even the management commentary has been very solid. So I would believe that you need to give some more time to the banks. Clearly numbers are strong, and I think you could possibly see the third and the fourth quarter to be much better than the first half.
Okay.
Uh, Also, just want to do just one final question from me. I mean, private banks in the last few quarters have, really worked on expanding their branch network. Once this, deposit growth, loan growth normalizes, do you see from, operational expenses playing a big weight on on their earnings?
No, it is bound to happen because obviously, deposit growth as well as cost of deposits is going to go up. So I think maybe over the next, say, 1 or 2 quarters, you could see normalcy in, deposit growth, or maybe the, net interest margins also obviously, reducing by a couple of basis percentage points. So to that extent, yes, there could be a little bit of pressure on the profitability of the banks, but the appetite and the cake size for the growth for most of these banks is very large, specifically now since corporate capex has picked up. I think after a long period, we are seeing money coming back.
All right, money coming back. Well, let's hope that trend continues, even though the bloodbath that we are seeing on the market seems a little unrelenting right now. But Avinash Gorakshakar, thank you so much. As always, pleasure having you here with us on Business Plus, and to you too, Suyash. And
Thank you, Kartik.
I think it's going to be the next few couple of trading sessions are going to be very interesting. And let's see
Definitely.
which side the tide goes, especially after the big results tomorrow from Maruti Suzuki and Reliance Industries.